Now, what if I told you that there's a brand new ETF that offers massive income paid weekly, that offers a high quality basket of underlying holdings, and at this point has not only not NAV decayed whatsoever, but has actually grown nicely in the short time it's been trading. Now, that's sort of the goal with any higher yielding investment, because getting paid high income is awesome, but if your underlying holding, whether it's a stock or ETF, decays in price over time, it's sometimes not even worth investing into. So in this video, we're going to go over this brand new ETF. We're going to dig into it together. I really haven't looked into it too much at this point, but from what I see so far, it seems very promising. We're going to go through and see what this ETF has done so far since inception and understand how it works. So if you guys want to do this with me, make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. So the ETF that I'm talking about that has not only not decayed whatsoever so far since it's been trading, but also has been paying massive income is MAGY, or MAGY, the Magnificent 7 cover call ETF. Now heading right into the fact sheet, it says the Round Hill Magnificent 7 cover call ETF MAGY implements a cover call strategy on the Magnificent 7 stocks. The fund offers exposure to the Magnificent 7 subject to a cap while providing the potential for current income. MAGY is an actively managed ETF. Now at first it says why MAGY. It says weekly distributions. MAGY seeks to generate weekly income through a cover call strategy on the Round Hill Magnificent 7 ETF. Precise exposure. MAGY offers precise exposure to the Magnificent 7 subject to a weekly cap. Actively managed, this ETF implements a cover call strategy, saving investors the time and expenses of trading options themselves. Now the ETF's expense ratio is pricey at 1.28%. But like I said, so far, the performance of this ETF, from what I've seen, looks pretty promising. Now, the fund's exposure is going to be, you guys, to the Magnificent 7, names like Apple, Microsoft, Alphabet, Amazon, Meta, Nvidia, and of course, Tesla. Now, you might be asking, why are these names worth having exposure to? Well, in my opinion, for one, these are some of the biggest, most powerful names across the entire stock market and the entire world. But not only that, these names offer some high implied volatility, relatively speaking, which means there is a potential to earn a lot when you're talking options trading. Now, like I mentioned, so far the distribution rate looks pretty high. We're talking 25.11% distribution rate as of right now. Now, the fund has only been trading since late April, currently filming this in mid-June, so it hasn't been trading all that long, but again, the performance so far seems pretty promising. Now, I also mentioned earlier that this ETF does pay distributions weekly. Weekly distributions are something that have become very popular, especially in the last 12 months or so. Getting paid more income more frequently is not only helpful to have more income in your portfolio to then reinvest into more shares of different stocks and ETFs, but even beyond that, if some of you guys like myself are planning on using some of these ETFs or stocks for that matter to live off later on, to help pay for your bills, help pay for your groceries, whatever the case might be, getting paid more frequently is probably only going to help. Now, looking at the distribution so far, again, this ETF has only been trading for a few months, but we're talking 47 cents, 47 cents, 27, 27, 27, 27. So it looks like the last 3 distributions were exactly the same, but earlier on the distributions were probably a little bit bigger, maybe because of the time frame, etc. Now, of course, I can't speak for everyone, but for an ETF that costs, let's say, $50 per share, more or less, as of right now, even if we got paid, let's say, 27 cents per share per week as of right now, I mean, for a $50 ETF, more or less, that would still be a massive annualized amount of income, especially if the underlying ETF, let's say, doesn't NAV decay, actually goes up in price, right? Which that's sort of the crazy thing about the Round Hill Magnificent 7 cover call ETF, or MAGY. As of right now, again, it's only been trading for a short amount of time, but it started trading around 53 bucks per share. Now it's trading just below $57 per share. But with this, let's be very clear here. The Magnificent 7 are decently volatile, obviously. They have somewhat high implied volatility, and if the underlying names, of course, drop in price, this ETF also can drop in price because it has direct exposure to the Magnificent 7. So just because this ETF so far is up 7%, it's up around $3.75 per share since inception, does not mean that it only can go up in price also. I think that's pretty obvious, but I just want to make that very clear. Now, looking at the total return, which is income plus price return so far since inception, the MAGY ETF is already up around 12%, which is very impressive considering it's only been trading since late April. Now it's really going to come down to the performance of the Magnificent Seven, I would say, over the next several months, along with the fund management and what they can do with the options trading strategy. But I would say, just generally speaking, having Magnificent Seven exposure through most strategies probably isn't really a bad idea, especially through a high income strategy like this one. Now lastly, I want to share with you guys if or if not I own this one and if I would own it, etc. Now as of right now, I do not own any Magnificent 7 covered call ETF from Roundhill, but from what I've been seeing so far from this ETF, I would 100% add a small position and maybe put it on an auto buy a little bit here, by a little bit there, just because getting some more Magnificent 7 exposure through a covered call strategy, one that pays distributions weekly on top of that, is definitely something I'm interested in. Now, as always with some of these ultra high yielders, I consider anything over 15-20% sort of ultra high yield. I would never make one of these names the entire portion of my portfolio just because I still think it's too risky. Now, before I go, there probably is one more thing you guys are curious about, and that's how in the world are the distributions that are paid weekly from the Roundhill Magnificent 7 covered call ETF, how are these distributions going to be taxed? Now, it says right here in the 19A, it shows that as of right now, the estimated return of capital as far as the most recent payable distribution, which was June 16th, looks like 100% of the ETF's distribution looks like to be estimated return of capital. From what I can see so far, MAGY actually crosses off most of what I would be looking for to add it into my portfolio, again as a smaller position, but I want to hear from you guys down below. As far as Magnificent 7 covered call or higher income ETFs, like the one that we talked about today, would you personally add this one to your portfolio, or if not, which other ones out there should I look into? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.